welcome back to my channel. Today, let us talk about residential property prices in Malaysia. Residential property prices globally are forecasted to continue rising, attributed to the super low bank's interest rate currently, various government subsidies given out for home ownership, as well as the pent-up housing demand coupled with shortage in supply caused by the current lockdowns. But will it be the same for Malaysia's house prices? If we were to take cue from the Global House Price Index prepared by Knight Frank, residential property prices globally have so far increased by 5.6% on average in last year, being the fastest rate in nearly 3 years. Knight Frank Global House Price Index is a means of benchmarking average prices across 56 countries and territories. Looking ahead, the house prices globally seems to likely to maintain their upward trend and are expected to be at the back of rising costs of construction materials due to the difficulty in obtaining raw materials as the current pandemic has disrupted the global supply chain ecosystem, resulting in delay in manufacturing and delivery for imported materials. In the case of Malaysia, we do note that there was a rising cost in steel bar, which started in November 2020, which has spooked the builders. The average selling price for Y10, Y12 and Y40 steel bars has increased by 25% from RM 2,292 per ton in November last year to RM 2,874 per ton in January this year. Meanwhile, the average selling price for Y16, Y20, Y25 and Y32 steel bars has increased 27% from RM 2142 per ton in November last year to RM 2724 per ton in January this year. Notably, the surge has seemed to continue to RM 2990 per ton and RM 2840 per ton respectively in April this year, reaching an all-time unprecedented high level since January 2018. Such a drastic hike in price over a short period of 2 months' time has certainly put additional pressure on contractors as they are exposed to the brunt of volatility in material pricing, given that the value of their contracts tendered earlier has already been fixed. But would the higher steel bar prices have snowball effect on the overall construction costs, which will then lead to a surge in house prices in Malaysia? While some analysts did argue that this inflation could only be transitory until the global supply chain ecosystem is back to its normalcy. The high steel bar prices that we are now facing is largely backed by the strong growth in steel demand globally instead of locally, following the reopening of business activities and vaccination after a year-long slowdown, coupled with the favorable pricing offered in the international market, for example, like in China. This would probably lead to lower supply of steel bars available for our domestic market and consequently contribute to the temporarily high in steel bar prices. Now, let us look at the local demand. In terms of local construction demand, though a gradual resumption has been observed in construction activities since second quarter of last year, a full rebound to the pre-pandemic level seems to be an unlikely prospect as concerns still abound around the transmissions of the virus, resurgence of Delta variants, and potential prolonging of lockdowns measures. Under such circumstances, it is unlikely the increase in steel bar prices alone will cause an increase in the house prices in Malaysia. Instead, builders would have no choice but to absorb the increased costs on projects under construction currently. Hence, the gross margin for most builders in Malaysia are expected to be reduced in this year 2021. Moreover, due to the uncertainties and low market sentiment, we could expect a weaker housing demand among house buyers at least in the near future. In particular, following the recent spikes in COVID-19 cases, together with the implementation of various rounds of lockdowns, most buyers would prefer to adopt a wait-and-see attitude when it comes to purchasing big items ticket like real estate. Add to that, there are also concerns on borrowers' creditworthiness and the tighter credit approval standards by banks. All this will result in limited room support for any house prices increase in Malaysia. After all, to sustain housing demand, housing affordability always plays a critical role. However, if you were to study the property overhang status in Malaysia currently, we can see those residential property prices above RM500,000 and above are making up the significant portion of the inventory, and this portion has been increasing for the past 3 years. A similar pattern can be observed in the service apartment overhang too, a bit more severe as the high-end units account for as high as 88%, coupled with a drastic increase in volume since 2018. To think of it, in fact, developers in Malaysia have been facing a double whammy, that is, overhang caused by oversupply of properties in the market, partly due to mismatch of product in my opinion, combined with weak housing demand attributed to the housing affordability factors even way before the pandemic outbreak, and both are likely to exacerbate further amidst the current worsening pandemic. On this basis, I opine that our Malaysia's house prices will not experience a surge like what is happening in other countries like, for example, US, because we do not have pent-up housing demand like them. Instead, we still have a lot of overhang inventory built up over the past few years. At least not until the beginning of 2022 and or after post-pandemic, when the market could start its recovery process if aided by favorable policies to be given by Malaysia's government by then. I think during post-pandemic, there will be a general shift in house buyers' behavior. There will be preferences for innovation and design practicality of a home, and many will appreciate to have workspace to work from home. Secondly, I do foresee that the economic fallout caused by the current pandemic may lead to an increase in mortgage eviction consequently. If we were to look at the chart here, it shows Malaysia non-performing loan was reported at USD 7.282 billion in June this year. This records an increase from the previous number of USD 7.166 billion for May 2021. This in turn would cause a rise in demand for affordable housing at good location in both rental and sales market, especially coming from those reeling from the brunt of this economic downturn. What about you? Do you think our local house prices would increase with the current low bank interest rate environment, coupled with various incentives given by Malaysia's government for home ownership thus far? This is the end of my sharing. Thank you for watching this video until the end. Hope you have enjoyed my sharing today, and if you find value in it, would appreciate for a thumbs up, and remember to subscribe to my channel and turn on the notification bell if you're not done so that you will not miss out on any of my future uploads. Ciao and see you again. Bye.